Let me cover moving averages. So let's look at this is the Nifty charts on a daily time frame. Now, when you see that actually this all the bars, sometimes it's very difficult to understand the trend of that market. So, in order to understand the trend, there is something called take averages of previous X number of bars and plot a smooth line that indicates a trend. Let's say, for example, if you have a moving average of 20, that means, let's say, for example, this is the bar. The previous 20 bars average they will take and they will put a point, and as move to the next previous 20, moves here, next 20, moves here, next 20, and so on. That is a moving average, so that it will smoothen out and gives the stock or any instrument the trend. So one of the most important actually moving average is a 20 moving average. So that's a it's an indication of the market trend. It's like a river flow. So it just to understand what is the direction of the current of the water, the flow of the river. The idea is that however great swimmer you are, it's very difficult to swim against the flow of the river, against the current. So it's always better to understand the trend and you trade or you invest along with the trend. Okay. So now how do we plot actually average, that is moving average? There are multiple moving averages will be there. That is something called simple moving average. Just take average of all the closing, I mean previous 20 or previous 10, what are the number that you wanted. Closing prices of that particular day or whatever that actual period that you're checking and plot the line. How do you plot here? Just go to indicator, type moving average. So you will get moving average simple. There is another moving average that you can do is exponential moving average that will give us more weightage towards the recent bars. But the moving average simple that works better. Take it, and here then you can customize here. The customization that you can do is what is the by default that comes as 9, that means 9 previous bars average that will take and plot. You see here it's already plotted. So here it takes the previous 9 bars averages and plot. So it will give a trend. Say for example this trend is uptrend, this is the downtrend, uptrend, downtrend, downtrend, and so on. So now you can customize that with the 20. As I said, 20 is a very important thing. It's like a flow of the river. It's a real significant direction of the market. So now you also can actually say how do we take average? Is it a closing price or opening price or whatever it is that you can customize? But it's always better to keep as the open, close, keep it. And style, if you go to style, you can actually choose whatever the color you want and what is the width of that actually this bar and so on. So now if you see, I plotted actually this simple moving average 20 periods. That means for every bar previous 20 hours taken and that plots. So that gives the trend of the market. So whenever that actually this actually moving average 20 moving average in up direction, it's always better you also in a buying thing. And whenever that is in a downtrending, it's better to you in a sell mode. So like this you can actually add a couple more, like let's say let's add a couple more. So one average let's put as let's say 5. This is just to follow the trend. It's definitely is going to help. I'll explain that how that helps. Let's say you can choose whatever the color that you want. So this is what we plot is actually the moving average of 5. That means for every bar previous 5 bars average taken, close, and then plots the bar. Now why this is helpful is, let's say for example if the stock or instrument in a trend, it will continuously follow that actually that 5. right? The lowest. Because let's say, for example, this is 2 away from the 20, and it's difficult for us to understand where to exit and so on. So that time it helps to plot a lower time frame, let's say 5. You can choose whatever you want, 5, 8, and so on. Some people use 5, some people use 8, some people use 13, and so on and so forth. Let's put another one is, let's say, 13 or 10 or whatever it is. Let's say I'll put 10. I will use a different color. Let's say not this color. And let me use this color. So this is by default original one that I will change to, let's say, 50, and that will mark is in, let's say, this color. Let's make it a little bigger. And one more thing that we add is 200. 200 is very, very important. Actually, any chart that you need to have two averages. One is actually 20 and 200. Remaining other things is not so important, but actually this 20 and 200 is very, very critical, because 200 is the mother of all averages. Style, let's say, let's use some big. So like this, you can add a number of moving averages. So it will gives idea where the stock, what is the trend, where is the support, and so on and so forth. Now look at this is the Nifty. Look at this, actually, this the trend. What you can notice here. So when moving averages all together, for example, this is 5, 8, 20, and 50. Everything's together. From there, a significant, actually, the movement that can happen, either up direction or lower direction, right? From here, it's significant movement that happened, and when the movement started happen, it will actually continue to follow that, actually, the lower moving average. And let's say, for example, here is a 5. This is actually when it's move away from this one. This is a average, moving average is here, but the bar, actually, a significant bar has come, so it is to catch up to the bar. That time what happens is either that stock will come down and touches that moving average, or it just keep on waiting that actually the moving average to just catch up. When it catch up again, it might start actually following and go on. Now once this moving average, actually, that push, that actual movement that actually ends, that means actually from there onwards it's not able to make any significant higher, then it will actually go and touches the next moving average. The next moving average again try to push it up, and when it comes to above the 5, for example, again it will follow the trend and keep on going, and so on and so forth. One thing that you need to understand is that if anything, let's say, for example, moving average is below the stock, that means that will actually act as a support. That means it won't allow to fall below the moving average. It will hold, it will serve as a support. But let's say, for example, here this is fallen below this moving average. That time, once a support broken, then it will become a resistance. Then while going up, these are all things again serves as a resistance. It will not allow to go up. Let's say, for example, here it has come down. Let's say, for example, here the 5, it has moved up. It could not move up. It came to 10. No, it could not even move up to the higher level. So it only the next option is to come down 20. Now 20 try to push it again and again up. Now there could be chance that no, it will be below this itself. It can start coming down, or it might even actually push it up. But once it started coming down, this time 20 may hold or may not able to hold. If it doesn't hold, then its only option is to go to the next supporting level. In this case, you see it touched a 50. From 50, then again it will try to push it up. Now when it push it up, then it goes to above the 5, then it become normal. Now again it will actually 5 keep on pushing it. If it doesn't push it, again comes down, then again it comes to 20, 20 again try to push it up, and so on and so forth. Now if it comes to here, See, now it was continuously following that 5 and it could not push any further. It has come to 10, 10 it could not do anything. It has come to 20, 20 also could not do anything. It has fallen below 20. Once fallen below 20, next time this serves as a resistance. For example, from 20 it has fallen to 50. 50 tried to move up, but actually 20 served as a resistance and pushed it back. Now again it came back to 50, but 50 also tried to move up again, but it could not move up above this thing. So only option is to come down to the next thing, right? So this way it works. So basic idea is that when they are together, as the stock moves up, they will actually become away from each other. Some point in time they will be together. The stocks have started moving either direction, either up or down. While moving, then what happens is all these moving averages is become away from each other, away from each other. For example, here these are all started to become away from each other. When it become away from each other, it cannot continue throughout that way away from each other. Some point in time again it has to merge back. You see, this is what happens. So it went up. If you see that one, this is 20 is too far, too away from this one. So it has to come back 20. Take example of here. It is 5, 5, 5, 20 is here. So 20, some point in time it has to come to 20. So it has come, all things are get merged. But actually 50 is still away. So again it pushed up, some point in time it has to come to 50 and again it will become a merge together and started going up and again started part away, again it will comes down, again merge. So basically the market actually always some point in time they will merge, some point in time they will keep on expanding. That means actually they become far away. When it's become far away, then you need to be cautious. For example, here this is far away from 20. This is not the time you should buy. You should always try to sell it. Whenever it's far away from 20, it's not a good sign to buy. So you can buy when it's close to 20, close to 20. But at the same time, please also understand, just because it's 20, you cannot buy just like that. There should be some buying momentum should have, that means there is a green bar should come, and in fact you can also check that one whether the previous red is actually taken out. So this bar did not taken out, this bar did not taken out, but it has come here. So but this bar has taken, as soon as it's taken out, actually then you can buy it. Let's say for example here it has come to 20, but actually it did not, there is no green bar at all. That means you can't buy here. So it can go further down, etc., etc. So take example of here, even if it comes to 50, though there is a green, but it did not close the previous, it did not overtook. I mean it could not crosses the red. So that's not a buy signal at all. So until unless this is a cross, the previous red, you can't buy. So here there is no buy at all. It's continuously, it's coming down, the trend is coming down, there is no buy opportunity. So basically, even though in between there are some greens comes, that is only just to go and catch that actually the moving average. Once touch moving average, again it's come down. See, from here it is actually it's a trend, it is started falling down trend the 5 and it become far away from this 5, it will go and touch the 5. From 5 it again started push it down. Now if it can't push it down further below this, then it will go and touch the next moving average, and the next moving average try to push it down, and if it can't push it down below this one, then it will go and touch, but here it's able to push it down, and again 5 catches up and so on, so on, so forth. The same fund happens here as well. Like for example, when it goes up, it first 5, and if it can't push it any further, goes to the next one, this will try to push it up, then it can't push it up, it comes to the next level and so on. And the same fund works in the downtrend as well. Once it is below any moving average, as and when it's move away from the moving average, it try to come back. Once it comes there, then it will try to push it the same direction, but if you can't push it below or above whatever the trend, then it will hand over that to the next moving average. So here it could not push it, it came to the 5, and then it could not push it further below this, then it hand overs here, then it try to push it down. Now here you see this is not a buy signal. So it's only just moving average, it's away from the moving average, it's just reached just because, as I said, if anything that actually move away from the moving averages, either the stock has to come touch the moving average or it has to wait there till that moving average catches, right? Take example of here, it has come down, this is away from this moving average, but after that it started just to keep on waiting to that touches, once touches again push it down, understand? Now again when touch 5, but after that it could not push it down, so it hand over to here, then it started pushing down. Now we need to see if this doesn't push it down, this 10 below this, then it will hand over to here, and then it will try to push it down again. It might go further, or if anything that if it doesn't crosses this one, then it will hand over here, and so on. Then it will actually start at reverse trending. So idea of here is actually what you need to understand is whenever that actually when you want to invest, first of all go and understand, because each stock, each instrument will have some kind of characteristics where some stocks or instrument, whenever they touches 20 it will go up and so on forth. Identify that particular trend, and whenever that touches that support level, then you think of investing. But whenever there are far away from these things, that you should be very careful, see that right where you are, whether this is the right time to invest or not. Okay, so if you are invested, this is fine, but let's say for example if you are investing, let's say for example you invested here, this is too away from every moving average. Now it has fallen here, in order to actually catch this thing, see how many days it has taken to catch up, these many days. For example, if you are referring monthly because you are a long term investor, and these many months you need to wait until you reach these things. So this doesn't make sense to buy whenever the stock is away from the moving averages. And see that right, what are the characteristics of that particular stock, and whenever that touches the support level, and if you see the buy signal, then you buy it. And when it's moved away from this thing, then you can think of selling it. But if you are a long term investor, then there is no to sell and so on forth. But it depends on what is the time frame that you are looking and so on and so forth. So this is a very clear signal here, it has moved very high, too away, because these are all spread across, and then it has to come down. So if probably it comes here, then what happens is, then it will keep on consolidating, it will go to 5, it will push some down, then again goes to 10, it will push down, then it again goes to 20, then it will push it down, and over a period of time this consolidation, again these all things will become together. When it becomes together, then actually the significant movement can happen in either direction. Let's take example here itself. You see here, for example you take here, wherever actually these are all the moving averages are close by, then the significant happens. And whenever they are very far, that time actually there is a consolidation that happens until unless these things catch up, then again keep on moving and so on and so forth. And here this 50 is away, and there is a consolidation happen. Of course 50 is still away from this one, maybe probably here touches, again it is far away, it comes down. Whenever it's close by, this is the time you should invest. Let's go to actually for example some kind of stocks just to check this. Let's go to daily or whatever the period if you want. See for example Reliance Industry, whenever all these moving averages together, it's somewhere in October last year, there is a significant movement happen. And then eventually what happens is there is a gap is actually filled up together to away from each other. Whenever away, see for example you see here it's away from 20, it comes to 20, again away from 20, see here it will touch sometime. So either stock has to come and touch here, or stocks do nothing here and there, it will go till it comes touches 20 and then goes up and so on. Now here if you see here as well as we discussed, if the 20 touches, if we cannot move significantly and if it start coming down, the next only thing is goes to the next thing, and if the next one is try to push it up, and if you can't cross the previous high, then it will only option is to push it further down. Okay, in fact this. So here there might be some other moving average, like let's say for example 100, or because we plotted actually say for example 50, there could be some 100 something is there, it would have cashed up and then again went up and so on and so forth, and that also could push to here, then it could not push any further, it has come down. Now it actually touched 200 as well, but 200 also could not hold it and it followed. So now it's following the downtrend, the 5 5 5 5. So it touched 10, it pushed it down, it's pushed down, it pushed a little bit. If it can't push it down further, it might touch, and the 20 might again push it down, or if can't push it up, it go and touch here, then it will try to push it down. If it can't push down, then it goes to here, then if it can go, by the time everything will be consolidated again, everything will become together. So together a significant move. For example, if you see here, this more or less everything is together, so that's the reason a drop. Okay. Similarly, let's say Infi. See here, Infosys daily framework, it's actually somewhere in the June 24, everything together, a significant movement happened. By the time everything is actually too away from each other, it's away from 20, it has come 20 try to pull up, then it could not pull further, then it touches again 20, it will try to go up, if it could not go up, then it has come down, it has to hand out the next one, the next one try to pull, no, it could not push it above that one, then only option is to come out here, right? So it goes like that. Same funda, when it's together, gone up, so 2 away, so it will come and touch 20, again move away, again 20, now 20 it could not push any further, so it has to hand over, but this also could not, so it will comes down and so on forth. And once it follows below, the previous thing will become a resistance. See, for example, try to go up here, but then after that again it push it down, this become resistance now. Anything support broken, next time it will become a resistance. Anything resistance broken, next time it will become support. For example, here it was below and it actually broken out, next time this will become a support. So now here it's a broken, here is a broken, next time it will try to go and touch here, then again try to push it up, push it down, this will become a resistance, it will not allow to go up. This is how it works. Together, from together it will move away, and again it can't stay away from ever, some point in time again it has to merge together, and once from merge together again it will actually give a significant movement either up or lower direction. Again moving average is spread across, again will touch, again merge, expand, merge, expand, merge. So this is the cycle keep on repeating in the market. Nothing goes straight line, and this is, once you understand these fundamentals, then it will help you to when to invest and when you when to exit. For example, if you take TCS actually historically, if you see, this is the monthly trend, like so it will go away from 20, it will touches 20, then again goes, it comes to 20, again goes up and so on. So whenever you invested, now try to invest here, but not here. Try to invest whenever that comes to support 20, that range, but not here. Okay, these are all the time to exit. You can invest here, but not here. Whenever that is too away from 20, you should not invest, because it's not, I'm not saying that 20, whatever the, each stock has its own characteristics, just identify what are the characteristics and just follow that characteristics, don't go against that. Okay, thank you.